Hey guys, welcome to my trades. Today I'm gonna be talking about my trade recap today on January 30, which I took on Nasdaq 100. So basically today I went short. My analysis basically was using liquidity as my main confluence. So what I did was I went to the 1 hour and I just marked my highs and lows as you can see, and then I went down to the 5 minute. In the 5 minute, basically, I just waited for during market open to the macro time at 9:50, and I just waited basically for this purple line, as you can see, which is my hourly high, to get swept. I want liquidity to be taken out so that I can start looking for a trade. And after that, I basically just follow my trading plan. Which is basically 5 to 4 confluences each time. So as my first confluence got proven, which is my hourly liquidity, I just waited for a 5 minute retracement, and basically it's this first black candle, so you can see. So when this happened, I basically decided, perfect, I can go down in scale to the 1 minute. Now, in the 1 minute today, I do gotta admit it was pretty fast. I almost got a really bad entry, but when I scale down, I use inverse or valley gaps as a break of structure. So I use this right here. Let me put it in red. I use this red square that I just put. I basically use that as my break of structure, which is my second step for my no, which is my third step for my trading plan. I use that as my break of structure, because there's not like my pattern, as y'all can see, like high, low, low, high. So I used that for my breakout structure, and I was today looking for value gap, as you can see here, but it got invalidated just by a tiny bit. But I managed to get equilibrium, which what I did, and for all of y'all who don't know, equilibrium, you take it from the most recent highs to most recent lows. So I just got my GAN box over here, and from the most recent high at that moment this morning, I just drag it down, and it just went up to over the 50% mark of equilibrium. And then I just waited for a continuation candle down, which was my last and final confluence, being my number five. And here I entered, and I aim for my take profits here on the hourly lows, which are, where's the graph? Which is basically this red line right here. As you can see, liquidity highs over here, lows over here. It ended up taking even lower lows and then continued up high, which probably tomorrow, I'm gonna predict it might go bullish. I don't know. But basically, I just put it to those hourly lows, and it was a really quick trade. I think I was in it for like 5 minutes. Let me see, like one, two, three, four. Yeah, around 5 minutes, straight down. It was beautiful. It was easy. It was like taking candy from a baby, to be honest. I just followed my trading plan from step 1 to 5, which is basically what I do. I try to trade as much mechanically as possible, because in trading, I like to trade with context, and I see this like a story. Um, when I was unprofitable, what I used to do was like I used this 5 confluences, and I didn't have an order. Without an order, this is just gambling, to be honest. But this is basically my trade of the day. I went short. Luckily, it won. I'm pretty happy on how I traded today. Let me cover the S&P real quick here in live. So if we go to the hourly, where we can go, let me put the time here at 10 to know when I can start looking. So we can see this is the hourly high, This is a low that got taken pre-market right over here. This is the actual low that I would have been like staring if I wouldn't be taking for longs, but we took shorts. Um, Here we go. And here are some lower lows. So basically, scaling down to the 5 minutes. Let's see what I would have taken. Market opens at 9:30, but we don't trade till 9:50 as a macro time because of the manipulation time where a lot of fake outs happen. You don't want to risk money that you don't want to lose. So basically, let me see. In the S&P at 9:45, we see our liquidity sweep, and at 9:50, we see our 5 minute retracement. So let me go. Then let me go scale to the 1 minute. And we set at 145. So 145. Here we go. So here we can use this as our invalid for value app. Equilibrium gets almost invalid. And I would have entered right here, like right around there. A lot of people like to enter on like the first continuation candle, but with equilibrium, especially going that high, I try to be safer because I do get admit trading is pretty stressful. So I try to be safe. Oh, lag. I try to be safer. So I technically would have, if I would have taken the S&P, I would have entered right over there, and my lower lows were here. So I would have taken a 1.87 RR, and if we would have had balls and enter up, we could have gotten a 5R. Holy shit. That's insane. But anyway, we would have gotten a 1 something, 1.9, 1.8 RR, which is still not bad. It's actually really good. And basically today, both pairs did pretty good. Our strategy would have worked on both. So yeah, thank you for watching my first video. I'll be talking about more trading concepts, and I'm trying to make it as dumb as possible. Like, I want to explain everything so that a gardener, I don't know, so that a preschool kid could learn how to day trade. Cause this is complicated if explained wrong, but to be honest, I think it's, if you really know it, and which is what I do know, I think I could teach it really well. So thank you for watching my video, and goodbye.